What's up, traders? Matt from the Trade Brigade here doing a technical analysis on ticker symbol TTCF for Tattooed Chef. Of course, on the left-hand side, we are looking at the daily time frame, and on the right-hand side, the 30-minute intraday time frame. These guys did just report earnings after the bell, so let's go ahead and flip on our extended hours session and see what's going on with the announcement. So for right now, it does not look so good. Pretty big gap down here, let's just call it $2 or $1.5-ish here in Tattooed Chef. Let's say for round number sake, we'll be opening somewhere around here. If we grab that other tool quickly, opening somewhere around 1850, and the pre-market low will be somewhere around 1816. Let's flip that back off, clean up that chart, and shift our attention over to the daily time frame. So as we always like to do, we talk about how to play gaps. To the upside, we fill our gap, because of course we are gapping down, at 1983, which was the low of today's session. So how do we play this? If we open here, fail to take out the overnight low on the opening drive lower, and trade back up through the opening print here, that's your signal to go long, and then we start to look for the gap to fill all the way up towards that 1983. Do keep in mind there could be a pretty major bump in the road here at this shelf of prior support. So that area is going to be right around 19 the whole dollar. So there could potentially be about a 50-cent trade here with relatively low overhead resistance, but once we get into that 1906 area, start to look for it to maybe fumble around a little bit. Of course, the full gap close is here 1983, which we have discussed. If it really gets going, if it fills the gap and keeps going, what is our next major area of resistance from the daily? It's all the way up here, right? So that's going to give us quite a ways to run. You can see we kind of had a double top in the area of 2150. I'm not saying it gets all the way up there. Don't get your hopes up, but that would be the next major daily target to at least pay attention to. Now, the flip side of this coin, of course, is the fact that we could get a gap and go, meaning we just continue on in the downward direction. In that case, if we open here and do something like this, consolidate in this range without really violating that opening print and start to break down underneath that pre-market low, what's the next major daily target that we have on the radar? If we do something like this, you can see a double bottom did develop in here. We don't want to cherry pick the exact low down below, but let's go ahead and split the difference sort of and call that at 1650, the next major point where we would start to book some profits on a gap and go. And you can tell that there's a lot more room to run to the downside here as opposed to the upside. Real quick, let's take a look at the options chain, and what you'll notice on the put side is that there's some okay open interest, but volume really isn't there to trade this with any serious size. We'll go out one expiration and see what's happening here. Again, same thing, open interest volume really isn't that great, and this one is hard to borrow. So this might just be an avoid and kind of wait and see what happens if we get a gap and go to the downside here inside of Tattooed Chef. So you have some daily levels to watch out for. You have a plan to potentially use given this framework that we've outlined. If you enjoyed today's video or learned anything new, let me know down below in the comment section or by simply giving the video a thumbs up. Don't forget our main channel is linked in the description, and all of that being said, we wish you a green trading week.